Hey, it's the Market Sniper. How are you guys doing? I regularly get people in the comments saying, oh, I'm having a tough time. I'd love to be part of your community, but just don't have the money. Well, first of all, money is part of the qualifying criteria. Why does someone say something like that? That sounds a bit mean. No, because you've got to self-actualize and be productive and have done something of value, because we need mature, smart-minded people that are of a certain level to learn and grow. And we're not looking necessarily to have everybody inside our community. But despite that, we do recognize that it's tough times, recessions and various other things. And in fact, we have partial products like our self-study, which gets you the content you need, a little bit of interaction on the live trading days, which are once a month, and one Sunday as well, where you get a webinar and you can ask questions. So you get a little bit of a feel, but you're not in the community, you're not on the boards every day, you're not getting the daily updates, and you're not in the hive, in the center of the beehive, but you get to get what you want. And if you're really committed, you can actually take your trading to the next level and upgrade and continue to grow on an escalating basis. But anyway, sometimes I just feel it is a tough time and I want to help people. So I said, well, here's a nice trade. Our community is already in. It's a little bit later for those people, but it's still early. Let me throw out, if you really mean you want to be in, are you prepared to risk something to gain something? Non-advisory. I'm just saying, hey, this looks interesting and our community are taking it. We could lose, we could win. And so I brought the Euro Swiss franc, I believe Agent Orange, Mademoiselle Lagarde, convicted, of course, of fraud, as every central banker should. It's part of the qualification process for becoming a big-scale criminal. You have to at least show that you can be a small and medium-sized one, much in the same way that I'm telling you about developing your trading to first making small profits before you make medium and large-sized ones. They have a different way, a different morality about earning their shekels, shall we say. But anyway, I sense I digress. So we gave it out to Twitter. And I said, for those who can't make our full cream TMP program, but have $1,100, which if you're in Britain would be about £850. In Euroland, it will be, God knows, around about 1,000 euros. Drop a retweet for a price of a retweet. A community-based trade on FX markets, and just about all platforms have FX available to it. And it is a 1 to 9 because we've got a structure within a structure, and we teach you about multiplying your way to wealth, taking a tiny bit more risk, getting in a tiny bit earlier, having an even tinier stop on a small time frame structure. That's called multiplying, not adding, not lots of winning trades and you add them together. You get even more size when you pinch that distance between the entry and the stop. And by being substantially bigger and a little bit earlier and with a tighter stop, you're wrong faster, that's for sure. But when you're right, you're damn right. That's right. That's what Druxy said. It's what Soros said when they had the pig on their table. When you've got the market where you want to pig out. But how can you pig out responsibility without blowing all money management? That is having super tight stops in that rare moment where they don't work against you. Actually, stops kills a lot of good trades because people don't know how to place them, don't know where to place them. We're different. We are the hunt volatility funnel traders, HVF. So let's show you that example and take you to the charts for a quick trading infomercial. I felt bad, you know, my YouTube channel are my friends. You're my friends, whether you ever engage with me or not. You're a friend. Thank you, by the way, for being a watcher and a regular view and bumping that view count up by 1. Especially thank you to those that hit the like button, and a double thank you. Those are our heroes who share the videos to help other people grow. We really appreciate that, and we hope it serves you, and it's a small way of thanking us if there's anything of value that you hear. So let's go to that trade idea. For that, I have to go to the correct chart, of course, and it is, wait for it, the Euro Swiss franc. Now, there's a bit of good news about being a little bit later than everybody else, is the HVF traders always like to be super early, before the triggering event, because then we sneak in a little earlier and we're even tighter than tight. You are getting in a little later, however, even a tiny bit later than the Twitter friends. Another reason to follow us, by the way, at the Market Sniper, at the Crypto Sniper. That's right, for the trading on those two different markets. But I don't want to see my YouTube friends left out. So this is the trade idea. And this is why you could qualify for our full cream and best product and actually have change, because it's less than $10,000, no matter what everybody tells you. You could have change. So risk $1,100 on an 8.56, you will have your $1,100 back, and 8.56 times an $1,100 in total return. You'll actually have a little bit, a fair bit over to go out for dinner with the missus. So what are we looking at? We're looking at the euro versus the Swiss franc. We have an inherent macro bearish bias on this pair. And what you're actually seeing is a squeeze within a squeeze, which I will highlight without doing too much training and teaching. We've got amazing materials to cover exactly this in the most entertaining fashion, ready to deliver you. In fact, you can start and get them right on the mini series right below. It's called our learning course. Our course of learning free of charge. You can get the course, hit the link where it is below, and you will have it delivered, little segments each day, every day, on your email address. A short video for you to watch, bite-sized and minute, but tastefully put together. That will bring the introduction of our basics of what we're all about and what the HVF truly means. Anyway, let's get back to the trade idea, because that's what everybody wants. You see, everybody wants a trade feed. Make me rich. Someone else to make you rich. And actually, I don't like that. That's why you don't see this very often. I want to show you how to make yourself rich. See, there's something slightly different in that. It's teaching the actual art of fishing rather than throwing you a fish. And that is what truly frees you. Most of the time, more fish, please, like a seal. More fish, please. Off, off. I think they go like that. We're told. Whenever I see them in the cartoons. But anyway, much better to be the fisherman that has the ability to feed for a lifetime. So here's your first macro squeeze. That's on probably a 12-hour. There you go. It's kind of half a day segment. Of course, the trend coming into this is down, and we like that. But the interesting part of this is I'll take another color, little boy Pippi Blue, and I'll do this, and I'll show you a squeeze within a squeeze. 3 impulses in there as well, which we like. There's your hammer dip. That actually came right down there for a hammer dip, was rejected. Now, by the way, I'm famous. Many people think he's the guy who called oil to single digits, isn't he? He's the guy that called the bond market turned 4 years ago, that Stanley Druckenmiller is finally talking about now, today, and is going very, very short. No. Before all of that, I was the Euro-Swiss guy. I was the pre-Greek crisis guy. I was the guy when this currency was trading 150. That's right. You're looking at 0.9 at the moment. 150 in 2009, and said there's something very huge coming for the euro in a loss towards the Swiss franc. There's something very major. I can't tell you what it is, but I give you the news before the news, and you get to read the headline later after you've made the money. And that was in 2009, December, and we fell from 1.5, and actually by the time we'd done falling, we actually fell below 1. In fact, it was a major fall. We can show you that. There's other videos where I've kind of recapped it. It probably deserves a case study and put in our material, because it rallied and then had a floor of 120. And we subsequently said on Tips TV, which was while I was in London and another program I was attending, making crazy forecasts, that the peg would fail and that it would fall deeply below and probably go into the 0.8s, which for a currency trade is an incredible fall. So we called twice on the euro Swiss franc, and that was big falls, calls and falls that all kind of happened, I'm afraid to say, and the story and the headlines came later. Now, this is not to the same scale. A 12-hour chart is not the patterns time frame that I had for the macro call, but it's still significant. It's a half a day chart. Every candle represents at least 12 hours, exactly 12 hours in franc, at least. Where do I get in that from? So you've got a squeeze within the squeeze. What makes this interesting is that we've put our worst stops over there, and we were getting in short roundabout here. And the triggering event, as we like to say, was the third low over there, in fact. Of course, the bigger pattern, it's over here. But you see this little hunting tool that it went and found a pattern within a pattern. You get that when you're in our community. That's right. After a year of being in the community, having drawn them manually and truly understand, I've got to send you to sandpaper my dojo. Sandpaper, polish on, polish off for a while, you know. I don't make it easy for you until at least you've done a year's worth. But once you've understood and drawn it and felt it and internalized it, we then provide you a tool that does it quicker, faster, in a more universal, simple way. That's what we like to do for our community members, add value, and for ourselves, of course. I'm using the tool myself. So back to this. This little primer squeeze within a squeeze is here, and this has now crossed the primer triggering point. And hence why I'm telling you, you're not getting it as early as everybody else. You're getting it after. However, I will point out the macro pattern, which also has 3 big juicy impulses, of which the first one of the primer is the third one of the macro, has its own entry, and you're actually getting this trade still well before the main pattern even enters. In short, the news is not talking about this FX news right now. But when we get to stage 3, which will likely come, stage 1, stage 2, stage 3, what happens in stage 1? Break and feign. Second stage, return move to funnel. Third stage, in the short, capitulation. At that point, somebody stupid would have said something, which of course Europe is full of, capable people to meet that criteria, or some event or some announcement by some central banking criminal cartel that is actively destroying the wealth of Europeans in much the same way as the Federal Reserve is destroying the wealth of its citizens. They're competing to out-destroy their citizens' wealth to ensure that they reduce you to serfs in a Bolshevik republic. That's right. But I sense digression once again. So let's hasten back to the trade in question to keep you out of the claws of the Bolshevik suppressors and keep you in clover. Yes, your bum, your greasy little bum in buttock butter. Let's keep it lubricated before you get reamed by the central banking cartel and their chicanery. They are, after all, fiddlers of the rear end. Anyway, I'm digressing again. Back to the trade, triggering event, yet still not triggered on the major. In short, you can avail yourself of such a trade. Now, being later, this was the one for Twitter. That was the entry for them. They are getting roughly an 8.5 RRR. Our people are getting double digits, because they were earlier still, that's right, earlier still, and yet that stop was down to there. And we still feel that despite the target being 90.15, whenever you get so close, this is what's called being cheeky and scraping the bottle of the jar a little bit. You see, HVF's method's kind of clever. It gives you a conservative amplitude which should be made. That means the price behavior should actually run that level with some change. You're not paid exactly. You're given a little bit of a tip for the journey. And when you're that close to 90, a key level, which is super technical, for which many orders will exist, typically you get the concept call, voids and vacuums, and then big stacks at key levels of significance, which the law of round number, thanks to derivatives, pegging, and all other concepts that you will learn about in our program, and you'll get a hint about in our free mini series, our free course for people to register. No spamming. We never sell our list. You'll never get an email from anyone else apart from us, and you'll get no more than one a month, which is our newsletter, where we give you great ideas, by the way, on trading. So it's a pretty good deal, 0 pence. Anyway, that 90 cents is suspected to fall, and I think you can go 8, 9, 9, and all the nines. In short, I'm being cheeky. I'm pushing the barge a little bit further. I am cheating even to the amplitude of our target, because I am taking some of the slack that you normally get made for a target on the downside. So that 10.88 roughly that we were getting, you are now on a dynamic like this. So right now on YouTube, and I have to say, this is entirely non-advisory. Neither do we have a license to advise or give any recommendations. We are, as you can quite clearly see, a crazy, wacky entertainment channel that sometimes talks about trading and making money and keeping the cabal at bay by preserving your wealth. So this one for most people would be around 5.64, assuming you put the stop all the way up where it is safest. However, the most cheeky amongst you, in the nitpicking ways that you would like to be, could potentially, and this is again merely a suggestion from somebody who would never tell you what to do in a financial or advisory sense, but somehow tells you a lot about what he's doing in a bid to give you some ideas in case you had none, such as buying gold and silver, which he's been ranting on for non-stop for the last 3-6 months, and telling you that key triggering events are occurring, whilst, should I mention, gold and silver are making brand new highs, both on silver and on gold, heading for 34.8 after just sneaking into the 34 zone after Sunday, heading into 2,700 and how much? I think we're into the 40s, 45, 2745 on gold. We can check it out for you. But of course, you can check it out yourself. So if you feel cheated by not getting a double-digit RRR, dear traders, let me tell you, most traders think they're getting a 1 or a 2 RRR. When I examine their P&Ls, you see, I worked in a trading academy. I looked at what people think they're saying and how they love to lie to themselves in a mental enrichment circle jerk. I check what they've actually done in terms of what trades they put on, where their stop loss was the whole time, insisting that they be in, and see where they actually closed. And they are snatching less than 1:1 trade profits and letting losses run beyond 1:1 downside. Now that, my friends, is a mathematical stacking method to the poorhouse, with almost guaranteed outcomes, the force of compound interest mathematics, and stacking bigger losses than you should be risking and snatching shorter gains is absolutely the gain and the road to ruin. And hence, I have a comment for you to consider. We take outlier, asymmetric trades with bigger rewards always. We find 1:2 boring, 1:3 boring, 1:4 still pretty boring. Hence why you might feel let down that you're not getting a double digit. So were you to go a little tighter and hope that we don't get a full axis return, our axis is here on the orange line, by the way, on the macro pattern, and sometimes the market can do that, which would mean you would harvest a loss if you were to be this aggressive. You could potentially say, if we're about to get a major triggering event, what if I survive that? Now that would be kind of aggressive. It might be wise to split your stake on this one and take a little bit less of the R's, but a little bit more certainty of staying in the trade in case there could be a little bit of volatility in the mix. After all, Agent Orange, that's right, on guard, Christine Lagarde will be stepping forth and blabbering her lawyer-faced jawboning, which has absolutely no quantification or understanding of anything financial or economic, but nonetheless the teleprompter reader will puke and she will follow, and you will hear grand narratives of fakery, deception, and outright lies for which you should chuckle, laugh, and throw dung there towards. But nonetheless, you may not be in the room. It may not be so effective if you're sitting in front of the TV. So you could just punish them by making money out of the event. And that, ladies and gentlemen, is how you might choose to do it. Remember, the safety trade is on the primer stop up top there, but the reward is less. You have to decide. You see, I'm not going to spoon feed you to the absolute level. If you choose to do this, it's going to be entirely on your game. And if you wanted to be super sure of staying in, technically, you could not even use the primer. You do, of course, see how it spoils your risk reward to 3.64. And I have the confidence in my methodology, or I'm only prepared to get a certain amount of R's. I'm kind of like a supermodel. I just don't get out of bed unless you're showing me the big stack of greenbacks. Kind of funny to compare myself to a supermodel when I have a complexion for radio and a hairstyle for God knows what. Your answer below. What's the hairstyle? I call it efficient, low maintenance, in fact, which is very unsupermodel-like nonetheless. But anyway, go forth and decide whether you want to partake in this cheeky little trade that's been thrown out to the masses that said, I cannot do it, it's too expensive. Well, do you believe in the method? Do you want to try it? Well, there you go. Can you do $1,100? Because then you can do it. Let's see. How many of you are going to take up the challenge? How many of you are going to say, $1,100 is a lot to lose? And I say $1,100 times 8.5 RRRs times 10.88 RRRs is a lot to gain, where you could then become a further specialist and you could learn to fish for a lifetime. The IP I will never come to remove from your brain, unlike Neuralink and Tesla and all the other psychopaths that want to penetrate your dermal layer with all sorts of poisons and chips. No siree, it is yours forever. I will nurture you and make you king of your realm, potentially. Some of that decides on you. Anyway, till next time, enjoy this quick interlude and decide and observe, do whatever you like. We'll see you later. Let's see how we do. Remember, all things can fail. You got to own it. And the only answer I will give you when you said, I got, is well done. You did it. Whether you lose it, whether you win it, whether you harvest, or whether you flounder. I do not control the markets. I just observe them and say, a unique moment in time should be exploited. And that's what I intend to do. And I lose and I win, and I aim to always win more than I lose. That's the game of trading. Till next time, catch you later. Thanks for watching. Bye for now.